All right, so it's Monday morning. Typically, we get a ton of deals in over the weekend, and some of them are good and some of them are not so good. So, I wanted to kind of give you some insight as to how we look at a submission that comes through and kind of how we disposition them. So, these are, this is the pertinent deal information that we would take a look at. So, first thing I like to do is look at the cash and the purchase price, well, the deal total, but the purchase price specifically. So, in this particular case, the borrower does not even have 10% of the purchase price in liquidity. And this is on its face, it's a commercial deal. So, it doesn't even have 10%, which is typically the max leverage we'd do for a beginner. Now, this particular person did write 8 units here. If you go look at the property, it's not actually 8 units, so maybe it's he meant 8 rooms or something. I don't know, but so it fails on cash. And even with that, 90% purchase price, we'd like to see a higher FICO. So 670 is lower for that program. And it's in Washington too. It's not even in like a major metro. I actually used to live in a town near Silverdale. It is not a major metro market. Seattle's on the other side of the water, so you couldn't even use that. So he's buying it for $1.5 million, has $75K on hand, plans to do $250K of rehab on his first deal, and sell it for 2.1. Now, I do believe that those numbers would be pretty close. This is actually like a single family home if you look it up, but I do believe those numbers would be pretty close. But the two issues would be this borrower doesn't have cash to put down into the deal, and they're also asking for 250 on their first rehab, which isn't out of the question, but you need compensating factors like credit and cash to get that done. So I would let the borrower know in this particular case that I can't do the deal because they don't have enough experience and liquidity. Now, if there was higher credit and more liquidity, it would be a different answer. But with this particular scenario, we would have to pass on it. And it's not even under contract anyway, so it doesn't really matter. But it's a nice home. It's just, it needs the right borrower. So not all the deals we get, we can fund. And we usually give you the reason why. And this particular borrower has 0 experience, at least that's what they told us to. So this would be a pass for us. And I think it'd be pretty aggressive for another lender to be able to get this done, given the fact that there's going to be basically no equity in the deal and a huge rehab for a beginner. If you have any questions or want your deal looked at, give me a call. See ya.